Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, January the 11th, 2013. As we do every Friday, we'll be going over the 19 major markets that we track for you at PerfectStockAlert.com so that you know everything that I know moving into the week ahead. This is the most watched video, so I'm sure you're watching it, so enjoy. We're going to start off with Australia's market, AORD, and I want you to pay attention to what we're seeing on basically the majority of charts out there. You'll see it again and again and again, all right? Look, first off, this is going to be a little bit different than what I typically do on Friday in that I'm not using the short-term charts, the 3-month daily charts. In this particular case, I'm going to be using the 2-year weekly charts. Every one of these candles represents a single week of trading activity, and the total time period will be, of course, 2 years. So looking at Australia's market, you can see that we have this little resistance line here, and we'll just kind of trace it out here. So we're looking at coming to the high end there and expecting to find a peak here. You also notice previous support here and previous resistance here. If you drew a line right there, you'd find yourself just about there. So these are the things that I see as being good point for be peaking at. Also, you'll notice that we're jumped up here and bouncing off of that 70 line, the ultimate oscillator, at the same time period, indicating we are starting to form a downtrend here between the high point here on the ultimate oscillator and the current one, showing that momentum to the upside is decreasing at this level. That makes a lot of sense, being that we're looking at this being a bit overextended here. So with that situation forming here at the same time period that we have price making higher highs, this is a bearish divergence situation that we don't trust, and we don't like to be looking for buy signals here. We'll be looking for this to break down relatively quickly. So keep that in mind. Also remember, this can develop for a while, but the end result is typically, again and again, you're going to find they eventually pay the piper. So look out for that. The Dow Jones Industrial Average, I still see the U.S. markets having more upside here. We're not quite in the peaked out situation. You'll notice we're not even at the 70 line on the ultimate oscillator where we get the overbought signals. So I still see upside potential here, especially with the fourth quarter earnings news that keeps coming out. As long as we keep getting positive news, you'll keep seeing us move to the upside. So I can still see move here in the Dow Jones to move to the upside. But again, I want to keep an eye on the fact that once you get up there, I don't expect you to take out this high, and that would then create a scenario where you have a bearish divergence would start to deform at that point. Right now, we're not there, but it's something that I actually see potential still in the U.S. markets, but everywhere else we're looking, you're going to see again and again overbought conditions. The French CAC 40 index, basic overall chart pattern looks pretty good. You got this nice little formation of a cup handle situation going on here, breakout there, and then we've closed above this little resistance line here, and so we're just moving to the upside. We have plenty of sailing room to the upside because we've already broken out of these resistance points, so the next resistance point will be about the 4,000 level there, so you can see some continuation here. However, again, I want to point out that this is overextension, so what we're going to see is a move up here and then a pull back here to test this previous resistance line to see if it's now acting as support. And you can also see that developing here, the high point here, lower high here, price is still doing this, and then momentum's doing this. Same time period, larger, we can see it as well here. So this situation here is telling you that this is going to be a rally, it's going to run up and then pull back down. Looking now at the Milan index or the MIB, this one's a little bit different than the previous chart in that I don't see this as a cup and handle situation here. I think it's more of an basic little inverse head and shoulders pattern going on here. The only problem with this pattern is that the neckline slopes down. That's just less bullish, so I don't expect to get a lot out of this rally here to the upside. And being that we're already overextended in the 70 line there on the ultimate oscillator, I wouldn't be considering this as a buy opportunity at all. The German DAX composite, I'm very concerned with this overall chart as far as if you're long, I would keep a really tight stop here. What you're dealing with right now when you're looking at Europe's situation is Germany is your strong one of the group. France is also a pretty good one, but France is getting warnings of, downgrade of their debt and things like that. So they're starting to shake, and when the leaders are starting to break down, then you're going to start to see problems with the pigs again. So think about that whenever you're looking at the German DAX composite. You can see that we are making a nice move to the upside here, but note the size of the candlestick formations, very small moves to the upside here. Before we were seeing much larger candlestick formations here. We had a lot more volatility, a lot more interest going to the upside here. And this is indicating that you're decreasing momentum. Of course, that's what that's telling you. But you can see that on the ultimate oscillator as well. High point here, lower high here, still lower high here. You are forming, again, another bearish divergence, telling you that this entire little move that you got going on here is going to end up being erased. So, again, I don't like this in any way, shape, or form. Alongside, also note the distance away from the 50-period moving average. The further you get away from the 50-period moving average, the less you have a good quality entry opportunity. So, be very leery of this market. Quick glance here at gold. In this particular case, you could view this chart a couple different ways. You could either view this as a situation where we have a inverse head and shoulders pattern like this, and we're looking at that as being, we're going to wait for it to break out above this line here, or this downtrend line right here, which I've drawn to indicate another way of viewing it. You could view it as a cup and handle situation, where you just have the cup formation right here, and then we have the handle develops right here. And now we're watching this. If you get a breakout above that, I might be interested. Right now, I'd still be looking at this little short-term trend right here, just down, so I wouldn't be bothered with it. But breakout above this little blue line I've got drawn there, then I might be interested in it. Also, you can point out that if you look at the price activity here in the ultimate oscillator, low point here, and then the higher low here, it's trending up, same time period. You've got this low point here, and then current low point here. You can see that we're trending down. This is a bullish divergence calling for reversal in the price of gold as well. So keep that in mind. And also with the debt ceiling in the U.S., which I do believe we will eventually raise the debt ceiling, and that will, of course, give a little bit of a bounce to gold. So keep that in mind. The Hong Kong Hang Seng Index, nice and overextended here. Don't want to bother with it in any way, shape, or form. You could draw a little trend line here and keep an eye on that. You break that trend line and this move is over. And you can see that you're also starting to form a little bearish divergence forming here between these 2 points here and here. That's concerning. And again, remember, whenever they get overextended, they can do it for a while, and then they eventually just pay the piper. Looking now at the BSE, or the India Bombay Stock Exchange, another very bearish chart in my opinion. We have had this little channel here going for a while, and then we broke through that and then immediately turned around and started forming another formation, which I believe is something like this. And this is not a bullish formation either. It's just a peaking signal, something that you're going to develop into and then snap right out of. And also you can see the ultimate oscillator indicating the exact same thing, a lower series of highs. Momentum is decreasing while price is increasing to the upside. It's unsustainable. It will fall. Looking now at the EWJ, or the Japan iShares, as you guys know, I am long in this position. Remember, all these charts are kept on the free website at perfectstockalert.com, as well as the short-term charts, which indicate where my stop-loss limits are at, and so forth and so on. So you can check them out there on the website. And like I said, I am long this current position because it makes sense. You have a nice little bullish wedge formation here, and we broke out of that. We're moving to the upside. I told you that 10 was the target. We hit 999. I think you're going to hit that again and break through it probably. Your next stop would be 1040 area. It's the previous resistance line here, or the 1050 area. So this is where I'll be looking for the next one once you get above this 10 level here. So I'll be looking for that. But again, this is a situation where you're getting overextended. So at this point, if you're not already long, don't jump on it. Just if you are, then advance the stop and continue to move to the upside and enjoy it. The FTSE, or the London Financial Times Index, doing the same basic overall story we're seeing with the German DAX composite. You can see this move here, and at the same time period going here, and you can see that we are now again over the 70 line, the overbought condition. So again, I wouldn't trust this at this point. You're also trading above the upper Bollinger Band line. Last time you were seeing something of this nature, what ended up happening? You fall apart. Yes, you continue to do it for a little while you form this overbought condition. You consider to fight it for a little bit, and then it just snaps. So keep away from it if you're not already long. If you are, keep a tight stop. Quick look here at the NASDAQ. This is another one of those positions that I am currently long. You can see the short-term chart on our website at perfectstockalert.com and see where my stop-loss limit's at. And again, I still see this as having room to move to the upside. You're not overextended yet here, but I will be keeping an eye on this high point here. I don't really expect the ultimate oscillator to take out that high, and so I think you'll take out this level here, and then you'll get overextended and start to fall apart. But for now, you can still ride this to the upside, as you have fourth quarter earnings that are going to be providing more support there. And again, you'll notice that price activity is not all that far removed from the 50-period moving average, so you don't have a lot of overextension here. In this case here, you had a lot more. In this case here, even more. Okay. The XOI oil index continues to have upside potential here. I see a pretty good portion of it. You also notice that it has been tightening up. This basic overall formation here is just a tightening up of the pattern, preparing for a bigger move, and I believe that bigger move is going to be to the upside. So keep an eye on this. Again, note price activity in relation to the 50-period moving average, not very far extended. You're not overbought here, and you have a very tight Bollinger Band situation here. It's developing for a big move, and I believe that big move, like I said, is going to be to the upside. Quick glance here at the UUP, the U.S. Bullish Dollar Index Fund. This one we are very bearish on. We've already taken a short position. We've advanced the stop on that as well. Locked in some nice gain. The overall situation here is we have broke this little channel that we had going on, and we are just in a downtrend. So as long as that continues to be the case, look for lower lows and lower highs. The Russell 2000 Small Cap Index has advanced substantially comparative to what the other U.S. markets have done. You're seeing smaller caps doing better right now, making bigger moves to the upside compared to the rest of the U.S. markets. But again, you are now over the 70 line here, and I would keep an eye on this. And with the price activity trading at or above the up Bollinger Band line, I do not want to attempt to buy here. Just let this thing play itself out, get a nice pullback, and you consider then whether or not you want to be a buyer. But don't try to short at this point, but don't be buying here in this market. There's better markets in the U.S. to buy than the Russell. The SPX, so the S&P 500 Large Cap Index, has closed higher here than we have seen over here, so we're starting to form an uptrend in price activity right here, yet corresponding time period on the Ultimate Oscillator is still showing a downtrend here. So what we're seeing right here is just a very weak demand to drive us higher, and that's why we're starting to see the Ultimate Oscillator, the momentum indicator, telling us we're losing speed here. And so this is going to be an overextension that we expect anyway. So just let it overextend itself. Don't be chasing. You'll notice a lot of stocks are lagging as well. I've got a couple positions on the portfolio at the website at perfectstockler.com. They're not moving to the upside. They're not moving to the downside. They're just kind of flat and laggardly. And that's something to think about whenever the markets aren't being bought up from their lows, and they're, you got individual stocks that I'm holding in the portfolio that are actually pretty strong, and you have a situation where they're just not moving. You don't have a great deal of demand there in the markets right now, so that's something else to think about. The silver chart looks a lot like gold. You can consider it, like I said, different scenarios. You can consider this a triple bottom here, 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 and here. You could view this as an inverse head and shoulders pattern like this. You could view this as I am, with just basically a little cup and handle formation here. Again, I'm not interested until we close above that line here. One more thing to point out about this, and you can do this a lot, you'll see me do it a lot. Whenever I'm looking at gold and silver, I look for their charts to confirm. If they don't confirm, I don't mess with it. In this particular case right here, low point here, lower low here. So downtrend at the same time period on the price activity, low point, low close here, lower close here. That would mean that the little bullish divergence that I just showed you a moment ago on the gold chart is being debunked on silver's chart. So if those two aren't telling you the exact same thing, don't even mess with it. You want a strong condition, a strong chart before you'll consider buying it, and this is not that. The Toronto Stock Exchange, the TSX, still got a little more upside here before you hit that resistance line we've been looking at. And this resistance is where previous support had broken down. Again, I want to point out that we are now above the 70 line, the Ultimate Oscillator. This is not where you want to be a buyer, but if you are long, advance your stop. The VIX, or the Volatility Index, is a great trade. You can see it better on the shorter term time frame chart, the 3-month daily, which is on our website with my notations on it. But in this particular case, you've got a massive gap in here, as well as the fact that you have this low close here and this lower close here. You're trending down at the same time period on the Ultimate Oscillator. Low point way down here. I don't expect you will get anything lower than that, and therefore this is going to end up being a bullish divergence. So I'm watching for this for reversal. Look for it to happen the closer we get to the debt ceiling debate, and it's going to start to push that higher. This is probably about the same time we're going to start to peak in the U.S. markets as well. Last but not least would be the Wilshire 4500, the EMW, and this one, a nice move above the upper Bollinger Band line here. It can still continue to push higher here, but don't be buying at this point in time. You want to buy when you get pullbacks, not when you're over the 70 line here. With this, it's still developing a bearish divergence formation from the high points trending down, and this is important because what typically happens, eventually you snap, and so I don't want you buying into that scenario. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Again, all these charts are kept there on the free website with my notations, as well as the short-term charts showing my stop loss limits, entry signals, and so forth and so on. God bless, take care, enjoy your weekend, and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.